Hello and welcome to Animal Spirits. As suggested by the name, we're all about animal spirits in financial markets. We analyze macros, micros, and a lot of other things in global financial markets. We invest and we share the research for your benefit. But, do take it with a pinch of salt, do consult your financial advisors, do your own research before you take any action. That said, welcome Balaji.
Hey Bharat, that was wonderful introduction of Phenomenal Spirits. So why don't we kick off Phenomenal Spirits with some analysis around global economic outlook?
Right, let's do that. Since we don't have animals or spirits right away, the the best we can do is markets. So let's do that.
Of course. So well, if you look at global economic outlook, the growth in 2022 hasn't been great for various reasons. The lingering COVID and the Russia and Ukraine war.
Has it been great, you mean?
Hasn't been great. Yeah, of course, it is not. Because if you look at the global GDP in 2021, it was around 6.1%, and it dropped to 3% in 2022. Okay, and the forecast in 2023 hasn't been great either. It's around 2%, 2.1%. So I mean that's maybe this is because of the Russian and Ukraine war pulling up some of the economies down further, and we have seen post during the war, or the time from which it kicked off, some of the emerging economy did take some stringent financial measures, right? Even after that, some of the economies could not recover, and then they seeked global support. So if we look at global outlook, it may not look great. However, if we split the outlook into developed markets like US, Europe, and leave the emerging and developing economies separately, then it might look differently.
It could, but yeah, it could.
So why don't we just start with US and European markets in the current
Okay.
session, right? So, well, if you look at let's start with inflation in US. How do you think it has panned out? Has Fed done enough to cut or manage inflation to the reasonable extent? Or, I mean, what's your opinion? What's your take on that?
Well, I mean, I am not the best judge of whether the Fed stimulus was overdone or the tightening was overdone. Where to stop, when to stop. I mean, those are almost philosophical questions to lay people like us, right? But that being said, I would say that the Fed could have started the tightening slightly earlier. Perhaps. I don't know. I'm just guessing that wouldn't have hurt the economy if they had started the tightening a few months earlier, right? But that being said, I think Fed has done enough. I mean, there's no way to do more without hurting the fundamentals of the economy and overcorrecting for inflation with deflation, which is worse, right? So I believe the Fed did the best it could under the circumstances. The timing could have been more optimal, if anything. I don't know, if at all, right? But that being said, my take on inflation is it's going to be a non-story a year down the line. because it's number one, it's going to be hard for inflation to beat its own base effect, right? Number two, the prices of a lot of things that are rate sensitive, from real estate to uh, credit to a lot of other things, um, have seen the impact of the rate rises, right? Not the labor market as yet, but I think that will also show with a lag. And Fed tightening usually shows with a lag, and the
Yeah,
lag
of
will
course.
be different in different sectors.
Yeah. Yeah. So why don't we check out the U.S. interest rates and bond market? I mean, that would give a reasonable idea
Yes,
of how it has panned out, right?
sure. Let's pull the
So,
charts.
so let's pull out some charts around that.
So these are the bond yields, but let's go to inflation per se, and
Yeah, I think let's discuss the. I mean, we could anyway correlate it with because these are some of the instruments that the Fed uses, right? So it would give us a decent indicator.
right. Sure. So yeah, so if we look at the bond yields, right? I mean, we are jumping the gun a little bit, but that's okay. Uh, what it means is the bond yields are way, way, way out of trend, right? And that has to correct back to the trend unless there is a structural change in the US economy, right? And the kind of structural change that we had not seen for the last 2-3 decades, right? So I'm not betting on that structural change having taken place unbeknownst to all of us, right? So my bet is this has to correct back to its trend.
Yeah.
So yields have to soften, and bond prices have to appreciate, and that means we are pretty much near the end of the tightening cycle. I mean, we don't know how long it lasts, but I mean, given the fact that inflation will find it difficult to beat its own base effect, it cannot last very long either.
Correct. I mean, if you look at historically, I think this is, I think, probably the longest that Fed has done it, right?
Yeah. Well, I mean, it has done it a few other times, but famously, Paul Volcker did it, right? And famously, he also overdid it, right? Uh, but I mean, hindsight is 2020.
Yeah.
So we have to give them the benefit of doubt. So that being said, you know, this is indeed rare. I mean, what's happening to the yields? The market is extrapolating this tight interest rate conditions forever almost. Yeah.
Yeah.
I mean, I would say, it's extrapolating it for 15 of the next 20 years, which is really difficult to materialize.
Yeah. Yeah.
But that's how markets are. Markets take the recent history and, extrapolate it forever into the future. Yeah.
Yeah. I think so. I think it's a valid point that you made. So yeah, I think let's see how the currency has panned out, especially of course U.S. currency, USD, your
Yeah, let's look at the
euro.
dollar index.
Yeah, sure. I think dollar index would cover everything. Uh, so just pull out some. Yeah.
Yeah. So if you look at the dollar index, right? in terms of the chart, it looks like the dollar index is, it has a few peaks once in a while, almost once in a decade, you can say, perhaps, right? And otherwise, it's generally flat to downish, because a growing global economy actually means the dollar index is slowly weakening, right? So that's the nature of dollar index. And based on that, we just got past a spike. And note that these spikes don't last more than a few months. So we are again, clearly correcting from there, and this would also normalize to a flattish downtrend, in a year or two.
Yeah, I mean, do you think that because the euro being significant weightage in the dollar index, and what's happening in the Russia and Ukraine, do you think that has kind of had an effect on the index? I mean, on a positive side though, but yeah.
Well, two things have had an effect, right? So, of course, the fundamentals on the ground in Europe, they've had some effect. But beyond that is the risk on to risk off movement in asset classes itself, right? What that means is all other currencies except the dollar, you can safely consider them risk on, right? So when the sentiment globally changes from risk on to risk off, the other currencies suffer as a basket. I mean, some might suffer more, some might suffer less, but most will get through. At least the most developed currencies will get through okay.
Yeah. Yeah, I think that's a valid point. So
see, there was a time when euro hit below parity on the dollar,
yeah,
right?
yeah, and we can't forget even the pounds. The UK pounds also
Right.
took some
So
beating.
there was, I mean, there was an adventure which turned out to be a misadventure. Whether it was right but wrong timing, we can worry about that later. That happened in the UK economy, and that had an effect on the currency in the bond markets, right? And there was discussions of the pound going below the dollar at some point, which never happened. So now both euro and pound have recovered, right, from that.
I mean, it looks though. I mean, I think it has to reasonable extent. Uh, Interesting. So let's move to the cryptos.
Okay.
So looking at how semiconductor has affected globally, semiconductor supplies have affected globally, it would surely take a beating on your mining costs. So how do you think the sentiments on crypto going to pan out?
Well, I mean, so there has been an uplift in the sentiment this year, right? But
Why don't we bring that to crypto chart as well? Just
one second. So, but before we do that, right? Here's the deal. I don't know, and you don't know what is the fundamental value of Bitcoin or any other token,
Yeah,
right? And there's no known way to measure that, right? What we can say is, are there good indicators of resistances, supports, or anything to trade with or invest with, whatever you like, right? That to me is the mining cost of Bitcoin, regardless of what's happening in the semiconductor industry, right?
yeah.
So that can be a decent support, and historically the chart shows that it has been. Let's pull that up.
see that.
Right. So the yellow line is the price of Bitcoin. The blue line is the mining cost. Right. It's seldom that the yellow line has, irreversibly breached the blue line on the downside.
Right.
Right. And whenever it has done briefly, it has come back too. Right.
Yeah.
So I would think of that as a support for the whole asset class in some sense. But that being said, there could be asset specific risks, and here's the only thing that it means, right? When I say the mining cost can be a support, it means, the reward of being ultra bearish from here isn't that much. That does it mean you have to be bullish? I don't know. Kathy Wood is. I'm not.
Yeah. Because
I mean, she has said in her big ideas that she expects Bitcoin to be at 700,000 by 2030, and that's her base case, not even a bull case, right? I would love to ask her what's the math behind it.
Yeah. Yeah.
Right.
That's interesting. So let's move on to discussing the equity markets.
Sure.
US equity markets, the US tech, the FANGs, of course the semiconductors, and how about the real estate,
Sure.
So,
Well, real estate as an asset class has gone down, but I don't think it has bottomed yet. It will only bottom when the real interest rates start going down, right? And this is not even like interest rate expectation. This is actual interest rate, right? So, I mean, no point spending too much time on that, right? Coming to tech, I think the tech story is fundamentally still strong, right? And, but when it's cheap, that's when you make the bet. I mean, that's how I think. I'm not saying everybody should think that way. And in my opinion, greed, for the lack of a better word, is good, right? But the funny thing is this. If you look at the treasuries and tech, one considered high growth, high risk, another considered low growth, low risk, right? Both have given up a lot. On the other hand, if you look at junk bonds or, traditional economy equities, they have given up a lot less, right? So does it mean that, junk bonds are safer than US government treasuries? I don't know. I mean, not in absolute terms,
yeah.
but the amount of crash seems to suggest something in that direction. So I think it's time that we start reevaluating our thesis on what is safe, what is not safe, and does asset class diversification work anymore at all and stuff. But semiconductors, again, I think most of the bad news is in the price, and most of the systematic effect of Nasdaq going down and that having an effect on the semi index is also in the price.
Yeah. Why don't we pull up Qualcomm?
Yeah, let's do that.
Which gives a decent indication on semiconductors as well as the tech. It covers both.
So this is the Qualcomm stock, and if you notice, it's been available at a really cheap price to earnings, and it's demonstrated strong alpha. Consistent growth. It's a growth stock, but available at a value multiple like 10, 12, whatever. I mean, that to me is a good deal. Can the deal get better? That's anybody's guess, but it's a good deal at the moment.
Yeah, of course, it is. I mean, look at the P's. I mean, it's good, looking very good, and the market share is fantastic. So I think it's a pretty good indication. I mean, if we assume that semiconductor markets, I mean supplies, would eventually have to, get sorted out, in the near future. I think this will surely be a good take.
Right. See, most things will normalize, right? Even COVID did.
Yeah, of course.
So, I mean, this is
I mean, the world will find an alternative for
and
sure.
this is a much easier problem, by the way.
Yeah, absolutely. Yeah,
So,
yeah, it should, and it will show. Okay, so let's come to the conclusion part. So,
all
what's
right.
your take? Whether it will be a soft or hard landing? What's your take? US.
I mean, it's difficult to imagine that it'll be an intentional hard landing, right? Especially with elections less than 2 years around the corner, right? And like I said, it's not going to be easy for inflation to beat its own base effect. So given all this, it's difficult for it to be a hard landing. Unless, there is some other surprise, some other unknown that, none of us have factored in.
Right. Yeah. Let's hope. I mean, it would be a decent one.
And let's look at it, right? Most recessions are deflationary, right? I mean, even if it's short-lived. So even if there were to be 2 quarters of recession, technically, right? Most likely that would be accompanied by deflation, right? And Fed has no business to step on the brake anymore, right? So
Yeah. Agreed. Okay, so that was wonderful. I think we have covered pretty much, most of the things in the developed markets already. So let's discuss the emerging markets in our next session. So I think, what do you say?
sure. I mean, unless there is something else which is much, much more compelling.
Yeah, because I mean the emerging markets has to be discussed separately because they have a different kinds of issues. It
Absolutely.
wouldn't be. Yeah.
Like the kind of currency fluctuations we saw in EU and UK, right? If we saw that in emerging markets, they would have gone broke. Some of them would have gone broke by now.
Yeah. Yeah. I mean, we could see the immediate effect in Sri Lanka post
Right.
the war. I mean,
Right.
when you could see that, and then they had to take some desperate
So
measures.
I mean, so the risk profile, the growth profile, everything of emerging markets is different. Absolutely.
Yeah, absolutely. I think it deserves a separate session, though.
Sure.
I think we should come up with that in our next opportunity. So it was wonderful talking to you, Bharat. I think then it was really awesome. Yeah. So I hope our viewers like our content. So yeah, that's about it. Thanks.
Same here.
Thank
Cheers. May the gods keep
Yeah,
the wolves in
cheers.
the hills.
Yeah. Bye bye.